Gold is taking a breather after setting a new high for the fourth day in a row. Concerns over the economic impact of President Trump's tariffs driving the lift in demand for safe haven assets. Here with more on what is ahead for the precious metal, we got Blue Line Futures Chief Market Strategist Phil Strebel. Phil, it is always great to see you and to talk gold, Phil. And I had a question, and I think you're just the man to ask this, Phil, is that, listen, gold has been glittering. Folks have been diving in there. It's been risk off. What if tomorrow, Phil, and obviously we've had this date now on our calendars, Phil, April 2nd, right? We've all been waiting for this. It's Trump, it's Liberation Day, it's the new tariff plan. What if he comes out tomorrow, Phil, about 24 hours from now, and who knows, Phil, maybe he actually sounds relatively more friendly, maybe more accommodative than people are expecting? What would that mean for the gold trade?
I've been thinking about that, and that's, I think, on the back of the minds of many gold investors. I mean, April 2nd, this is like the Super Bowl of tariffs, and how much fear is priced in the market. This is like a market-moving event. This reminds me of like when CPI was coming out, or the jobs report. But the reality is that gold does have everything going for it right now. Yes, you have this event risk, you have the U.S. trade policy, but fiscal policy, monetary policy, now they're factoring 2 to 3 interest rate cuts in 2025. You got geopolitical situation. It's volatile in the Middle East, Russia, Ukraine, China, Taiwan. You've also got a global growth slowdown with a 30 to 40% chance of a recession. So the precious metal has been one of the strongest performing commodities this year, posting its best quarter since 1986. And multiple financial institutions are increasing their price targets since we passed through 3,000. Now it's 3,500 and beyond. So as long as you've got the strong central bank buying and the demand there, particularly from the emerging markets, and the solid inflows into the exchange traded funds, I think gold has some backing and some support levels. Now, tomorrow's event, the average true range on gold, it's moving about $40 a day. You could see 2 times that. So something like $80, I wouldn't even bat an eyelash if this thing sold off that much, just to come back here and charge on to new all-time highs.
Phil, Al Root, you build a strong case, I'm sold. But do I want miners? Do I want the metal? What's the best way to do it from here?
You've seen that movie Gold Rush, and what a disaster that is on a day-to-day basis. Why would you want to own a miner like that when you're just trying to speculate on the underlying price of the metal? Miners, we've seen record gold prices, and we've seen them, yes, post record profits, but the revenues just aren't there. Their big impacts are rising labor costs, rising inflation costs, gasoline, insurance, labor, everything else. It just doesn't make sense, in my opinion, to own these miners. And I think that there's a lot more risk owning them. You got to know what metal they're producing and where they're producing it at. So it's just, in my opinion, it's just not the way to play it. You got to play the pure price play. I think you go with the futures contract or minimum one of the ETFs in order to be in for that ride.
So bottom line, Phil, when you're looking at a chart of the metal here, what levels specifically are you watching?
Okay, now the technical, that is the one scary part of it, because that's the only thing I don't like about the price right now, because the cure for high prices is high prices. Technically, it's overbought. It's at the top end of a trend line. It had a shooting star pattern set up here today. Oftentimes appears to be the top end of the market. I think if you're smart, I think you wait for a pullback in this market. Oftentimes, just like you were talking about Newsmax, the pullback always occurs when you least expect it, and that's when prices really come down. So yes, to the original statement in this, if Trump does come back with a little bit more relaxed tariff strategy and talk and seems to be a little bit more open-minded, I think you see some of the exit coming out of the gold market, out of the safety, reducing some of those hedges, and then you're going to see people go back into U.S. equities because of the fact that they've sold off so greatly. I think that there's a lot of great opportunities and a lot of good companies there.
Is there any other opportunity? Will we be looking at any other precious metals, silver, or any other industrial metals over the next few months?
Okay, so you look at the problem with silver right now is that it failed at a double and triple top at $35. The gold-silver ratio is 90-1. That shows you that it has outperformed its peers. Silver is 54% industrial demand. So you need to really put on your thinking cap if you're going to watch the silver market and speculate on it. You've got to see industrial strength. You need to see growth. You need to see China really come back and come back strong. The copper market, that's one that took a playbook out of steel and aluminum where it rallied into the announcement of the tariffs, and once the tariffs were announced, it pulled back from here. I do believe that long-term structurally copper is one of the best metals to be in because of the construction, the rebuilding efforts that are going to go on with so many natural disasters and repairing, parts of Ukraine and things like that. The copper demand is there, and a supply is very difficult to bring on right now. So copper may be pulling back, but I think there's a new price band to play, maybe 450 to 550 rather than the, we're stretched too high and it really should be back in the threes.
Phil, always great to see you. Always great to have you on the show. Thank you.
Yeah, thanks for having me.
And while